Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20-year Treasury Bond ETF. The symbol is TLT. This is the high volume Treasury Bond ETF. I did record this video, by the way, on Thursday, May 15th, 2025, and I'm just updating you on the levels that I've been following now for many months. I do provide, not weekly necessarily, sometimes weekly if there's a lot going on, but I try to give at least once a month update in the TLT. And this simple image is a weekly bar chart, by the way, going back over 5 years. And I'll be watching and showing really the same weekly bar chart throughout. This, in a nutshell, shows a long-term bear market in the TLT coming off of that March 2020 COVID high. In other words, longer-term interest rates have been steadily increasing over that time frame. There's been more of a sideways action with these kind of brief, 1 to 2 month, rotations. But it is 92.79. That is the ceiling below which the TLT remains locked in a long-term bear market. In other words, the longer-term trend in longer-term interest rates remains one of continued higher interest rates. We haven't set off a midterm sell signal. That would come with the settlement this week below 84.70, which is one of the reasons I'm providing this update now, because we are right there. In fact, the low this week is 85.20. And so 84.70, just below that area. If we close below 84.70, I see another meaningful leg down that should result, obviously, in longer-term interest rates continuing to climb progressively over the next 2 to 3 to 5 months. In fact, if we were to close below 84.70, it is this full channel extension that I would expect. When you've got this very well-defined range, that is also a channel bottom that we tested back in January, and we tested again in the April big sell-off. That was this bond market sell-off collapse in conjunction with the stock market collapse that in many people's opinion was the reason why Donald Trump backed away from his tariff stance and created a 90-day pause. So I don't want to get into that. What I am going to say here, though, is if we close below 84.70 Friday, May 16th, we enter a sell signal that should continue to play out through the third quarter of this year, 66.80 being the next big picture objective. And what does that mean with interest rates, long-term interest rates? A 16.5% move in the TLT typically represents a 1 to 1.25% move in long rates. This drop would be around a 21% drop. So it would be around 1.5 to 1.75 interest rate increase over the next 3 to 5 months, perhaps. And that's what the charts are saying. The Fed controls short-term interest rates, obviously, the Fed funds rate. It dictates Fed fund policy, interest rates. But in terms of the long bond, the Fed observes like everyone else and participates, but it really is a supply-demand element. And so, in other words, if we were to close below 84.70, it tells me that the longer-term bond market is likely to continue to decline. In other words, interest rates are continuing to climb, and we'll see, it'd be similar to this move here from September of 24 to this low here of January of 25. It's the same distance, and it would continue south to this, and this is the equivalent of about 1.5% increase in interest rates over the next, I'm going to call this was September to January. This is a 4 or 5 month move. That's why I call it a 3 to 5 month descent to 66.80. So in terms of trading this, if we close below 84.70, I see no good reason to stay long the TLT if your time horizon is 3 to 5 months out. That's the first thing. The second one is if you're a longer-term trader, options trader, for instance, you might reach for 67 strike out of the money puts that don't expire. I would go a year out on this better part of a 6-month move to the downside. On the way down, there is a descending channel bottom at 80.31, and this is dropping next week to 80.04 and the following week to 79.77. This would be a near-term target. I'm going to call that a 3 to 5 week move or sooner. If we close below 84.70 this week, that is Friday, May 16th, 80.31 and dropping gradually, considered a 3 to 5 week target. We could bounce nicely off of this back into the upper 84 handle and continue to play this out for several months perhaps. But I do see that eventually, within a matter of 2 or 3 months, we would likely close below this 80.31 channel bottom, and then we'd have an accelerated descent to the overall objective under that scenario at 66.80. So that is the big picture. Now, this hasn't happened yet. We are still in this, and I'd mentioned how this might actually play out, what is playing out now. Several months ago, I mentioned how we could continue to fill this wedge out, which is exactly what is happening. 84.70 floor that I'm going to say into the third quarter, that is to say to July 1st and beyond, and a 92.79 ceiling that is here for the year. Of these two, the one that is likely to win the day, if you will, is 92.79. In other words, 84.70 is likelier to give way to selling pressures than 92.79 is to buying pressures on just a technical basis. I'm not reading into the economics here. So closing below 84.70, I also will say this, that the Fed is not likely to lower rates as we continue into the third and fourth quarter, as many people are anticipating they just might. I would see that if the long bond is continuing to descend in value, in other words, interest rates on the longer term interest rates are continuing to gradually climb as we move into July, August, September, October, I don't see the Fed lowering rates. But you can take that for what it's worth. That will obviously have an impact on the stock market as well, and you can read into that what you like. Upside, if over the next few months, and we're not going to see this level soon, this could be 3 to 5 weeks from now, perhaps, 2 months at the most, 92.79 and dropping. If we can close above 92.79, then just the opposite. I see interest rates dropping, longer term interest rates dropping, and this is the scenario, closing above 92.79, whereby I would expect then the Fed would have all kinds of room to actually lower the federal funds rate, which is obviously much anticipated, and so you see it obviously in the headlines constantly. And so if we were to close above 92.79, this 103.01 channel top would become our next, this could be 2 to 3 months, 3 to 5 months or so, where we could top out here perhaps through the rest of the year, because I don't see this happening just based on how far we are from 92.79. This is maybe at the soonest end of June, and it could easily be into August before we might even test this and close above it. So that's why I say by the end of the year, under that scenario, 103.01 in reach. But we're a long way from that right now. Here's where we are. We're in this wedge. We're at the bottom of this. This is bottom picking territory, by the way. If you're a swing trader in TLT, if you're calls and puts, you invest in either one of them, or you just trade the TLT, I think you can bottom pick 84.70 in anticipation of, over the next month or two, 92.79. And once again, this could be an options play where you reach for 92.50, 93, even strike out of the money calls that don't expire for 3 or 4 months on this 1 to 2 month play. Once again, if we close below 84.70, no good reason to be long the TLT. I see interest rates then climbing, longer term interest rates continuing to climb as we move into later year. The 66.80 level, consider a 3 to 5 month objective if we close below 84.70, and that would likely represent an interest rate increase in the longer term the bond market of around 1.5 to 1.75% at the most. I think that pretty much rounds it out. I'm going to leave it at that for this particular Wicked Stocks update on the TLT. You have a great day.